Paul O'Malley, welcome to the programme.
Thank you.
I think you've got one of the toughest jobs as a CEO at the moment. $2 billion losses back to back, and I think your underlying profit was a little worse this year than last. Have you really turned the corner?
Look, for the last 3 years, it's all been bad news, tough decisions, really big changes within our business. I think we're starting to see the benefit of those changes. At the same time, we've had to take very significant restructuring decisions in Australia. We've been growing our Asian business, and I think we've had some very good news on that front. So I'm pretty confident we've turned the corner.
Looking at what's happening in China at the moment, I guess you must feel vindicated about the decision to basically exit the export market there.
I think the timing of that decision, which we announced a year ago pretty much to the day, was absolutely the right decision, and thank goodness we did it when we did. If we were if we were seriously in the export business at the moment, it would be a very challenging place for us.
Can you explain what the company would be faced with right now?
I think if you're significantly relying on exports and you don't have a low cost base, we go back 12 months, we're losing $2 million of cash a day. We no longer are. We've actually had a very good cash flow year. So we're benefiting from the restructuring decisions. They're always very, very difficult. They're very tough on our people, but it just goes to show that you have to look at the world as it is and make the decisions necessary to turn your business around.
Looking at the outlook over the coming year, and I suppose you've had a month or so now, looking at the $8, your steel prices, and indeed your input prices, your iron ore prices, how do you see the year travelling?
Look, I think one of the biggest challenges for us is Australian domestic demand. We've seen a slowdown in building and construction activity in the last 6 months. I think access to credit for small, medium-sized developers is a challenge for the market. I think the higher concentration in the banking sector has seen less lending into building and construction. So I think there's a policy question there for Australia on access to credit. So domestic demand is tough. I think next year, with lower interest rates coming through, confidence returning to the Australian domestic scene, which is pretty poor at the moment, I think we'll start to see a rebound in activity. The high Aussie dollar, though, that's tough on domestic manufacturing.
But you actually see the demand situation domestically as a more important driver than prices?
Look, we've moved our business to being a domestic mainly manufacturer, which is not a bad place to be. But domestic demand is the key for us. If we can increase domestic demand and minimise what is left of our exports, we improve our profitability dramatically.
We've just had a Prime Minister's task force on manufacturing. What specifically would you like the government to assist with?
I think being a manufacturer in Australia, you're faced with some very high cumulative costs. We don't have the productive focus on what is it that we can do across the spectrum to lower costs. At the moment, people justify a little bit of a cost increase here, a little bit of a cost increase there. That's the whole wrong focus. If we compare the US, low exchange rate, not much you can do about that in Australia. Low energy costs, there's a lot we can do to lower energy costs in Australia. Flexible workforce, we've got that here, but it's pretty high at the moment. So we compare our activity in the US, where there is an increasing investment in manufacturing, with our activity in Australia, and you can see that there is a lot that can be done. Bottom line, we've got to lower the cumulative cost of doing business in Australia.
Picking up on energy prices, one of the things that certain elements of manufacturing have been calling for is a certain amount of gas reserved at reasonable prices for the domestic market. Are you a big believer in that?
Look, I think from a manufacturing base, you've got to look at your raw materials as a source of competitive advantage. But also, by the same token, economists say export everything you can and get the best price. I think we have to take a bit bigger view of the Australian market and look through cycles. What I have been focused on is the resources boom will end in Australia. And at that point, we need to make sure that we've got a broad-based economy, and we can't be economically rabid as we head down that path.
You mentioned flexibility, labour flexibility. As of this morning, you had strikes at Port Kembla coming up this Wednesday, I think. Is that still the case?
Look, we manage our industrial relations in-house. Our aim through our management team at Port Kembla is to communicate with our employees and get the right balance. I think we've offered reasonable salaries or wage increases. I think they've been accepted. Where we have to continue to work is to ensure that we maintain our cost competitiveness and find productivity improvements. The entire debate is about productivity. In terms of the restructuring we've done in Australia, I think it'd be disappointing if everyone didn't just step back and say we've got to be low cost, fair and competitive. I think we'll get there, but there is certainly some issues to be addressed in the short term.
One of those issues seemed to be having a national EBA rather than just a state-based EBA. Why is that important to the company?
I think that the bottom line is we need to be working in an environment where our employees feel as though they've been dealt fairly, and we can continue to find productivity improvements. If you're in the Illawarra, you want a steel business. To have a steel business, it's got to be efficient. And therefore we need the best mechanism for achieving those efficiencies, noting that our major restructuring is complete.
Do you think though that our issues could be costly for the company this year?
I think we'll work through the process in a fair and reasonable way, and I think we'll get a decent outcome for everyone.
Let me ask you about your Nippon tie-up, because it seems to have got rid of your debt problem. The market, I think, believes that the price was reasonable. Just how much growth do you expect to capture? How does this change your outlook?
Look, it's been a really interesting time the last 12 months. While we've been going through a very tough restructure in Australia, we've been trying to grow our businesses outside of Australia that are performing very, very well. About 10 months ago, we started engaging with Nippon. We saw that to really inject some speed into the growth of our Asian business, we needed to access new products and new customer segments. And with Nippon, we believe we get that. Nippon wanted to follow their Japanese manufacturers who are moving into Asia and supplying them product. They saw our manufacturing assets as the key to doing that. So together, I think this is a fantastic outcome for our business and really good for our shareholders.
And presumably Nippon sees something in it as well, because they've been struggling with their results and their outlook has disappointed recently too.
Sure, there's definitely a shift of manufacturing out of Japan into Southeast Asia. Nippon see our manufacturing footprint as really fast forwarding their ability to keep supplying their Japanese customers. So it's absolutely a win-win. It's one of those transactions where you step back and you think this has been a really good outcome for everyone.
Paul, you've decided, the board's decided that you're forfeiting your bonus this year. There was a lot of controversy last year over your bonus. What drove the board to this thinking? Was it the fact that many other CEOs, with Boom having peaked, foregoing their bonuses? Or was it the two strikes rule? What was it? Well,
you can't get away from the fact that our net loss after tax has been a significant loss. And when you step back from that, I'm responsible as the CEO for the performance of the company. We've done some really good things in the last 12 months, but the bottom line is there's a big loss. So I offered to have no pay rise, no short-term incentive, no long-term incentive, and in the circumstances, the board were very happy to accept that offer. So doing the right thing at the right time is always essential. You've got to be accountable. We think we've turned the corner though, and hopefully we're going to deliver much better results for our investors over the next 12 months.
I wish you luck with it. Paul O'Malley, thank you very much for joining me.
Thank you very much.